Stocks failed to hold on to gains earlier in the week. Metals and realty lead the slide, while healthcare and financial show resilience today.
HDFC Bank reports below par credit growth. Yes Bank's growth also lags peers, but both of these see declines in CASA ratios. But IndusInd Bank posts its best loan growth in 12 quarters.
Equitas Small Finance Bank gains after SBI Mutual Fund gets RBI's nod to up its stake, while strong December business boosts Angel One and an order win lifts Railtel today.
Fresh fears of a slowdown following weak China data and IMF's warning hurt crude Brent declines over 5%.
Good afternoon. You're watching Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor, Pavitra Parekh. So, Pavitra, weakness persists in the market today. And today is the day when probably all the macro factors and the uncertainties carried forward from 2022 is really showing up on the market. So look at the chart of Nifty 50, continuously losing the momentum at the moment, and yes, closer to 1% down in trade at the moment. Now remember, FIIs were net sellers in yesterday's trade, and today we'll have to see those numbers also very, very closely. So when we talk about Nifty 50, 18,100 level also breached downwards, 150 points lost at the moment, more than 500 points lost on Sensex at the moment at this point in the trading session. When we talk about Bank Nifty and the financials, the area and the pocket which most of the market men like as being resilient for this particular year, that is also showing a lot of weakness. In fact, in line with the key indices, 0.84% down, and mid caps, which were yesterday showing enough resilience, are down 1%, slight underperformance to the key indices. On my screen, steel stocks, metal stocks, the high beta stocks are the ones which are losing ground in terms of the percentage the most, and the other big boys like Reliance Industries also not supportive, and there is a drag. So advanced decline ratio clearly in favor of the declines today.
Oh, absolutely. That's the market action. By the way, some important flashes at the bottom of your screen. We were just telling you earlier that the cabinet has approved the green hydrogen mission. More details coming out. This is information that my colleague Parikshit is picking up, that the cabinet has approved it with an initial outlay of 19,744 crores for the green hydrogen mission. So this is some important information that we are picking up. By 2030, mission is likely to achieve 5 million tons of hydrogen production capacity. So I'm going to try to get him on to help us with the details. That's what's going on with this latest news. But in terms of the stocks and sectors that are really taking it on the chin today, you have the metals pack, which is doing the worst. So a few of those names will be up on your screen. Real estate not doing well at all. So something like a DLF, SOBA. Actually, the entire pack is only under pressure, but these are some of the larger losers. In terms of cues, it is going to be a lot about what's happening globally now, because you have the FOMC minutes today. Then on Friday, you have the jobs report. And crude prices are in focus as well with China reopening. Of course, that 5% decline is good for us, but let's see if it holds or not. That's what's going on in terms of cues. But let's kickstart the show now and bring you updates from the banking sector. IndusInd Bank, HDFC Bank, as well as Yes Bank have all released business updates for the third quarter. Abhishek joins us with a complete roundup. Abhishek?
Well, Pavitra, as you mentioned, HDFC Bank has given its provisional business update. Now, the loan growth has disappointed over there. So, to begin with, deposit momentum was healthy, growing at 19.9% YOY and about 3.5% quarter-on-quarter. Now, across banks, we are seeing that customers are shifting from the low-cost deposit, that is CASA, to bulk deposit or, to higher interest rate term deposit. So, over there, you are seeing a shift. CASA ratio is at 8-quarter low of 44% when compared to 45.5% in the previous quarter. Loan growth on a YOY basis was at 19.5%, which is the weakest that you are seeing in 4 quarters, and about 1.8% on a sequential basis, which is the weakest in last 6 quarters. Now, interestingly, in this loan growth, the corporate book has declined by 1% quarter-on-quarter, which has led to the decline in overall loan growth. X of pool that they share with HDFC Limited, the loan growth is at 19.5% YOY and about 1.86% 0.6% quarter-on-quarter. The credit to deposit ratio is at 5-quarter low. So we'll need to watch out how the net interest margin expands or contracts for them in Q3 FY23. Yes Bank, it's a mixed bag deposit franchise that's pretty robust. The overall deposit growth is nearly 16% YOY and about 6.8% quarter-on-quarter. The CASA has also held up well, growing at 14.2% YOY and 3% quarter-on-quarter. So declining CASA ratio is just 10 basis points on a sequential basis. Loan growth, that's a weak momentum over there. They have lost market share both YOY and quarter-on-quarter, given the fact that the loan growth is at 11.7% YOY and just over 2% sequentially. Liquidity coverage ratio has improved massively on a sequential basis. Coming on to IndusInd Bank, the YOY loan growth of about 19% is perhaps one of the best that you are seeing in last 12 quarters. Deposit momentum up about 14.3% YOY and nearly about 3% sequentially. The CASA ratio is at 7-quarter low. We are seeing this transition happening across banks. So it is at 42% when compared to 42.4% in the previous quarter. Calculation shows that, the absolute value of CASA might have grown lower than the overall deposit momentum. Retail deposit, however, was pretty strong, growing at more than 6% quarter-on-quarter. Advances growth 19% YOY and more than 4.5% sequentially. Credit to deposit ratio has expanded both YOY and quarter-on-quarter. So net interest margin can expand for them YOY and quarter-on-quarter in a rising interest rate scenario. Back to you.
All right, Abhishek, quite an exhaustive analysis and a snapshot on all the companies from the banking sector there. With that, we'll move on to the power sector. An important development today. Tata Power is in focus. The stock is down 1.5% after the CERC committee ruled on the share of mining profits from the Mundra PPA. And Vivek Iyer gets us all the details on the impact of this on the company and what lies ahead. Tell us, Vivek.
Absolutely right. So it's an important clarification. This has been something that's been in the works for quite some time. So the CERC committee, that is the Central Electricity Regulatory Commission, has ruled on sharing of the mining profits as far as Tata Power is concerned. So what is the committee saying? They're saying that the company will now have to share 30% of mining profits. And remember, Tata Power is actually supplying power under emergency measure from the Mundra PPA. And this particular order, is for the period from May to December of 2022. So it is an interim order for the interim period where the company has been allowed a cost pass-through. And this is separate from the other, plea that the company has in terms of actually increasing tariffs from the Mundra power plant where it is supplying electricity to various states. So that is the first important clarification. So we had a couple of brokerages that actually have written on this particular development. DAM Capital believes that this is quite a positive development in terms of the reduction of the sharing of mining profits from 100% to 30%. They believe that the company can now expect to write back almost 500 to 800 crore of additional profits as far as this particular development is concerned. The company too has welcomed this particular decision and told us that they are quite happy with the outcome of this particular plea that they had.
All right, Vivek, thanks a lot for bringing us the latest there. Moving on, now the other stock that we're looking at is Radiant Cash. It was a steady debut for the cash logistics player and it listed with gains of around 8%, but now the stock has seen a sharp up move. It was up around 20%, currently around 18.5% in the green. In fact, we spoke with the management earlier as well, and they said that they're looking at a revenue growth of around 22% every year. So listen in to what they had to tell us.
They have clearly indicated that at least not for the next 6 months. Well, yes, the revenue growth that we are looking at is about 22 to 24% every year hereafter. That's what we are targeting. And as far as the touch points are concerned, from the DRS we were at 42,000 points. Today we are at 55,000 points. So we are looking at about 1,100, 1,200 touch points being increased month on month. So that's going to be the rate at which we are going to grow. The industry today, whole industry together is doing about 1.4 lakh outlets. Network cash management is growing very rapidly as far as we are concerned, and that's also the more lucrative segment in both of them. And so therefore, I think the mix is likely to come down to closer to 60% of pickups and growing to closer to 30% of network cash management in the near future. Well, in the last 3 years, we paid, these are COVID-impacted years, but to our shareholders, we have paid about 57 crores as dividends. So this is a track record that we have. And even as we speak, We have substantial cash on our books. So we are looking forward to maintaining this track record and provide our shareholders with a healthy dividend policy.
All right, from that corporate voice, we'll slip into a short breather on Business Lunch. But remember, research firm Axis My India has conducted a survey to map the consumer sentiment trends across the country. We get you all the details on the other side. Stay tuned.
Welcome back. You're still tuned into Business Lunch. Now, an important story. Earlier today, the NCLAT rejected Google's appeal seeking a stay of the 1,337 crore rupee penalty imposed on it by the CCI. Ashmit is here to fill us in with the latest. Ashmit?
Well, just for the benefit of our viewers, keep in mind that in the month of October is when the CCI had slapped a penalty of 1,300 crore rupees on Google on the charges of abusing its dominant market position, especially vis-a-vis Android mobile operating system for various phones. Now, that is the very order that was challenged before the NCLAT. What is urgent, what is important to keep in mind is that given that some time has lapsed between the order and between the case being heard before the NCLAT, that penalty amount of 1,300 crore rupees has become due and payable by Google, and that was the chief concern that was raised by Google as a part of its arguments. It went on to argue that, look, this is an order of CCI which is contrary to the practices that have taken place over a decade, that these are concerns that were in fact red flagged before the CCI, but it has not taken into consideration. Also gone on to say that there are factual errors, that the order of the CCI is in fact a case of plagiarizing an order that was passed in anti-competition practices in Europe. The broad takeaway here is that sum and substance of these arguments was that there is a stay that was sought by Google on the CCI order part 1 and of course also on that penalty amount of 1,300 crore rupees. The NCLAT, however, has refused to grant any interim stay. So that is coming as a big setback as far as Google is concerned. No stay on those competition commission orders, and also importantly no stay on that penalty amount of 1,300 crore rupees. Now what's important is that in the course of the arguments itself, Google had said that they will be looking to avail of legal remedies in case a stay is not granted. The only legal remedy that is available now is to challenge this order before the apex court. So the understanding that the lawyers gave NCLAT as well as to us speaking after the hearing is very clear that Google will not be sitting on this NCLAT order. This order, which has rejected their prayer for a stay on the CCI order, is now likely to be challenged before the apex court. So all eyes, the focus now turns from NCLAT to the apex court, which is where Google will now make its fresh case for seeking a stay of the CCI order as well as of that penalty amount of 1,300 crore rupees. Back to you.
It's a very important story, Ashmit, and let me tell you that a lot of global investors and MNCs with presence in India are watching it very closely. But good to see those warm jackets come out. We in Bombay don't have any such luck. So enjoy the winters, and thanks so much for all the details. All right, shifting gears then from Google CCI case to my colleague Abhishek Kothari, who's standing by on the big wall to tell us all about securitization as part of our special series, Fin Street. Abhishek, take it away.
Well, in Fin Street today, I am covering securitization and everything that you need to know about securitization. Now, securitization is the conversion of an asset, especially a loan, into marketable securities, typically for the purpose of raising cash by selling them to other lenders. Hence, in India, securitization is an arrangement largely done between NBFC and banks. Generally, banks give loans to NBFCs. Since banks do not have a direct reach to rural customers or customers beyond the large cities, they buy such securitized portfolio from NBFCs. Let's understand securitization in detail. An NBFC, let's say ABC, borrows money from a bank, let's say FGH, on a regular basis. So as per RBI rule, the bank has to meet its priority sector lending targets. Hence, FGH will ask ABC to securitize a part of its eligible portfolio and acquire this. FGH will now hold securitized assets in its balance sheet and bear the credit risk on it. What does this do for ABC is that it provides liquidity by freeing up resources locked up in assets, also offering a lucrative price for such assets which are securitized and transferred. So why does bank do securitization? banks mostly find it difficult to reach deeper geographies to serve the priority sectors. Manpower and expertise in acquiring and managing such business is also often lacking with the banks. NBFCs typically are well versed with local realities in the region they operate, and they also have a deeper reach within them. Hence, it makes a lot of sense for a bank to acquire loans from NBFC to meet its priority sector lending targets. Now, recent ruling by RBI lets understand that loans with residual maturity of less than 365 days cannot be securitized. Also, the loans must have a 3-month track record of repayment. The impact. So this can have an impact on the securitization volumes, but the quality of loans securitized could improve. Also, shorter duration loans will not get securitized now. The extent of securitization among lenders, M&M Finance, Awas Fin and Indostar Cap, they have the highest securitized portfolio amongst listed NBFCs, while AU Small Finance Bank, Bajaj Finance and IIFL Finance, they have the securitization level of under 3% of their overall AUM or asset under management.
All right, Abhishek, thanks a lot for getting us that complete explainer. But with that, we're going to get into a short break now. You don't go anywhere. There's lots more news and market action when we come back.
Welcome back. You're watching Business Lunch. Now remember that consumer sentiment is going to be an important yardstick to really look at the overall economic activity in the year 2023, especially with inflation and interest cost rising. So research firm Axis My India has conducted a survey to map the consumer sentiment trends across the country. And my colleague Shilpa Ranipeta is standing by at the big wall with the findings of that survey. So Shilpa, what are the key highlights there?
Well, higher household expenditures, lesser spend on health and more savings, that's a sentiment among consumers as we enter into 2023. Now, according to consumer data intelligence company Axis My India's Consumer Sentiment Index for January, the net consumer sentiment index score, which reflects the consumer sentiment in the past month of December, has improved over the last month to about 8 points. Now, overall, in the past 6 months, it has been hovering between 7 to 10 points. Now, this survey looks at household spends and trends that cover media consumption, entertainment and tourism as well. Now, a sample size of 10,000 people across India are covered in this, and 70% of whom are from rural India and the remaining from urban, and a majority of respondents are male here. Now, the biggest takeaway from the survey is that household spending in December has gone up for 73% of the families surveyed, and this, they say, is largely because of rising inflation. Now, that is something that we've seen impacting nearly every sector, remember. Now, where has this spending gone up? 41% say that they're spending more now on essentials, while 7% say that they're spending more on health. However, these numbers are slightly lower than December, indicating some improvement of sentiment. Now, most of these spends are happening online, with the majority saying that they shopped on Flipkart rather than Amazon, with a preference for year-end sales. Now, this is also indicative of increased consumption of digital media, with 52% saying that the time spent on digital has increased in the last 1 year. And here, Facebook was the most used social media app. Now, overall media consumption has increased for 21% of the families surveyed. Now, as consumers enter into the new years, savings also are taking precedence, especially amidst rising inflation and pandemic-related uncertainties. Now, for most families, their financial goal in 2023 is their child's education and simply saving more and building better financial habits. Now, this, Axis My India says, reflects the current environment of resilience and cautious growth going forward.
All right, Shilpa, thanks a lot for getting us that complete picture. But with that, let's move on and talk about the green hydrogen mission, which the cabinet just approved a short while ago. Sources are telling us that the cabinet has approved an initial outlay of 19,744 crore rupees for the green hydrogen mission. Parikshit is here to tell us more about this. Parikshit, this was a highly watched space, and the approval finally coming through now.
Well, yes, the talks and deliberations on the green hydrogen mission had been on for almost 1 year. There was a cabinet note which had been moved in November, and today it has been finally approved by the Union Cabinet. So 19,744 crores is going to be the total outlay for the green hydrogen mission. Out of this, 17,490 crores will be allocated for strategic interventions. Now, what does this mean? This means direct incentives for green hydrogen manufacturing in the country to the tune of approximately 13,000 crores. The mission plan also envisages incentives for electrolyzer manufacturing in the country to the tune of approximately 4,500 crores. So this is a plan that the government has till 2030. Sources also say that the total allocation of 19,744 crores is an initial outlay, and the scheme, the plan could be reviewed over the years. There will be more specific schemes for different segments which will be launched by the government, but this is an overarching plan, vision plan and an outlay plan that today has been approved by the cabinet. So what are the targets? By 2030, India hopes to achieve 5 MMT of hydrogen production capacity, 8 lakh crore expected investments from the private sector, reduction of 50 MMT of annual greenhouse gas emissions as well. So you will have the cabinet secretary who will be spearheading the National Green Hydrogen Mission, and there will be an empowered group of secretaries as well. There will be a secretariat for the National Green Hydrogen Mission that will also be set up to take this plan forward for the next 7 to 10 years.
That's right, Parikshit. It's a very big move by the government, and this is the fuel of the future. And with the government thrust on it, many big business houses will make business proposition on it, like we have seen in other renewable sources of energy. Thanks so much for all the details. That's all the time on Business Lunch. Thanks so much for tuning in.